Broad-based sell-off on Wall Street as contagion fears grip investors ahead of the crucial Fed policy decision later today. All three major indices shed over 1%. Majority of respondents in a CNBC Fed survey expect a 25 basis points rate hike from the central bank. Stocks in the Asia-Pacific open weak ahead of the Fed's policy decision. Markets in Japan and mainland China are shut for a holiday today. The SGX Nifty is suggesting a start in the red for the Indian market. Oil tumbles overnight, losing as much as 5%, with Brent trading around $75 a barrel as concerns around the U.S. debt default and expected rate hikes from the Fed and the ECB weigh. Tata Steel reports an all-round beat in the fourth quarter, while Ambuja Cements delivers a strong show on the back of healthy margin. In key earnings to track today, Titan will report its fourth quarter results. The street expects a good quarter margin and outlook for quarter 1 FY24, which will be closely watched. Cash-strapped airline Go First files for bankruptcy before the Company Law Tribunal, suspends operations on the 3rd and 4th of May, citing fund crunch. Aviation regulator sends a show cause notice asking why action should not be taken for the inconvenience caused to passengers. Good morning in the Mumbai News Centre. I'm Sonal Bhutra. You're watching Power Breakfast. A lot to catch up on. Big news that we got overnight as well. And as far as the global markets are concerned, there is some pressure. So first up, let's take a look at the Asian markets, largely lower after the weak handover that they got from Wall Street. It was a very volatile session in the US markets ahead of the Fed decision. The debt payment is something that is lingering over investors' minds as well. So all of them put together did put some pressure on the US markets, all of them down anywhere between 1 to 1.2%. And this is something that we are seeing in the Asian markets as well. Hang Seng is down 250 points. We have Taiwanese index, which is low by 0.4% as well. And across the board, of course, Nikkei and Shanghai are shut for a holiday. But we do have the Straits Times lower by 1%. And the other, something like Hang Seng, as I pointed out, is also lower by 1.2%. So not a good-looking screen for the bulls as far as the Asian markets are concerned. And SGX Nifty is indicating that the start for our own markets, well, that could be in the red. 80 points downtick is what the SGX Nifty is indicating. Remember, we've been seeing 6 days of rally. It has been good session in last couple of days for the bulls, but looks like there could be some profit taking today. So with that, let's move on and talk about the U.S. market. Stocks fell on Wall Street on concerns over the health of the banking system and the Fed policy decision later today. Key indices all corrected about 1%, while banking stocks also slipped in trade. Shares of Uber, however, rallied over 13% after quarterly earnings beat estimates in trade. Okay, all right, that's global market action. Not looking like a good picture as far as global markets are concerned. But how will these overnight cues impact our own markets? We have our research team to tell us just that. A lot of domestic cues as well that we'll be watching out for. Our research team is joining us, Vivek, Surbi and Nigel. A very good morning to all of you guys. Vivek, let me come across to you first up. What is the market setup looking like today?
Well, good morning. It's very mixed. India has actually closed yesterday upwards for the 6th straight session, while when you're talking about the overnight cues, extremely weak has come in, especially from the US markets. US markets ended lower for the 2nd straight session. The regional bank continued to see quite a sharp sell-off in yesterday's trading session. European markets too followed Q, and you actually saw most of the key indices ending with cuts between 0.5% to almost 1.3%. Crude oil prices yesterday saw a very sharp decline. This is multiple worries coming in as far as the crude oil front is concerned. Brent futures ended lower by over 5%, and WTI futures too ended lower by 5.5%, coming in at the $71.6 a barrel mark. Now, when you're talking about the Indian markets, like I mentioned, gains for 6 trade sessions. FPI selling continued to remain quite robust. Yesterday's trading session, you saw quite sharp moves coming in as far as IT as well as the metal pack that actually supported the markets. But today, quite a few important cues to watch out for. Markets will react to the results of Tata Steel. Important results like Titan 2 will be declared in the session today. Also, we'll have to keep an eye out for the entire aviation pack. Go First insolvency is significant news. So, you'll have to watch out for aviation names like Interglobe as well as SpiceJet. You'll have to watch out for the Wadia Group companies like BBTC and Britannia, and also lenders that have exposure. So, all of these will remain in focus. Asia, along expected lines, is given a weak opening. SGX Nifty 2 is indicating a muted start for our own markets.
Yes, it's a muted start that we are expecting, 85 points lower on this one. But of course, a lot of cues in terms of stock movements also. Surbi is here with the list of stocks to watch out for in today's trading session. Surbi.
Hi, good morning. Thanks for that. So first on my radar is Ambuja Cements. The numbers were better than the CNBC-TV18 poll. The revenue came in at 4,256 crores and margins came in at 18.5% versus a poll of 17.8%. Next is Tata Steel. Again, the numbers were better than expected and the losses in the Europe business have contracted. The revenue came in at 62,961 crores and it reported a margins of 11.5% versus a poll of 9.8%. The PAT came in at 1,566 crores. Home First Finance, the healthy business momentum continues due to strong customer acquisition. The net interest income was up 35% on a year-on-year basis and the net interest margin came in at 6.1%. Spandana Spurti, again strong set of numbers, and their sale of NPS to ARC also aided in stress reduction. The disbursals were up 120% on a year-on-year basis and the net interest income came in at 329 crores, up 104% on a year-on-year basis. Fino Payments, the total income was up 13.4%, the EBITDA was up 46% and the margins came in at 13% versus 10% same time last year. KEI, the numbers were pretty much in line with expectations. The revenue were up 9%, the gross profit margins came in at 26% and the EBITDA margins came in at 10.4%. Other than that, we'll be also watching out for Titan, Godrej Properties, Havells and ABB India as they'll be reporting their numbers today.
Okay, that's a long list, Sirbi. Thank you so much for getting us up to speed. Finally, let me go across to Nigel, joining in with all the cues from the F&O space. Hey, Nigel.
Well, morning, Sonal. Yesterday we had the Nifty Financial Services Index that played out its weekly expiry. So the intraday chart will tell you the final 30 minutes drop that we saw on the banks as well as financials, that's because of the weekly expiry that played out. But the FIs, boy oh boy, how they have turned things around. They added long positions and they added long positions big time. More than 22,000 contracts is what they added on the long side. And now they're net long on the index. Well, I haven't got a chance to say that all the way since January 24th. So, bulk of that short covering has been done. Just take a look at it. Imagine from 91% a month or so ago, it's come down to around, 49%, or that's the short positions. Now, on the option side, well, they were buying some calls. But the problem really with this market is they're hedging themselves because they're writing calls as well. That's giving you a sense that higher levels, we're likely to see some bit of supply that could come in, given the kind of call writing that we're seeing. And this is after a while. 50,000 call contracts is not a small amount. Now, if we're looking at, the Nifty yesterday, we did well. But the index, India VIX as well moved higher. Now, that's a bit of an ominous sign as we've seen in the past, because normally they work, they don't go in the same direction. On the option side, the 18,200 call, well, that was getting written aggressively yesterday. It added more than 40 lakh shares odd, and the total open interest so there is close to around a crore. Even the Nifty Bank side, the 43,500 call, well, that was very, very active, which brings us to the levels. On the upside, the bears are positioned such that the 18,250 level does hold out. While on the downside, 18,000, 18,050, that should be a bit of a support zone. If that breaks, then you're looking at the 100 DMA. For starters, the SGX Nifty suggesting a bit of a pullback. Back to you.
Okay, all right. Thank you so much for that, Nigel, Surbhi and Vivek. That's the power prep for the day. Time for a short break now. When we return, Tata Steel reported a good set of fourth quarter earnings. We'll line up all the highlights on the other side. Stay tuned for that. Welcome back. Still tuned into Power Breakfast on CNBC-TV18. Let's talk about some important earnings now. Tata Steel reported a good set of fourth quarter earnings. Nigel is joining us back with all the highlights. Nigel, what did it look like?
It looked very, very good. Tata Steel's numbers, we said it in closing bell as well. It appears the street is factoring in Tisco could do the disco. The stock ended at the high point of the day and these numbers look very, very good. On the top line, there was a beat. On the EBITDA performance as well, there was a big beat. And profitability as well, that's a very wide range out there, but that as well looked good. What are the factors that played out? The India business out there, it's the best that we have seen, in the last few quarters. And more importantly, much better than any of the analysts. The number, EBITDA per ton came in at around 16,700 rupees per ton. We were working with around 13,350 and bulk of the street was between 13 to around 14,000 rupees. So the cost saving is something that hold them in good stead. And that's precisely the reason why there's a big beat out there. Europe as well. Yes, we were bracing for a big loss over there. But, the EBITDA loss out there, that has come in at around $94 per ton. We were working with an EBITDA loss of close to around $107 per ton. So that's, the losses were lower out there. The Thailand operations very, very small, but over there as well, you can see a bit of an improvement that we've seen in the past few quarters. The icing on the cake is, after reporting a good operating set of numbers, the net debt comes down by more than 3,800 crores, which is positive. And they've also declared a dividend. So the street will like these numbers. Expect the stock to open up well in the green after gaining yesterday. But keep in mind, steel prices have corrected in the last 15 to around 20 days odd. So some caution out there. But otherwise, these numbers look very, very good. Back to you.
Okay, disco could do disco. Nicely put, Nigel, there. So, of course, we'll be speaking to Tata Steel MD and CEO TV Narendran at 1:35 p.m. today to discuss the company's earnings and the outlook going forward as well. Stay tuned for that conversation. With that, moving on, turbulence in the Indian skies as another airline is strapped for cash. Go First is filing for bankruptcy. The airline has voluntarily moved the National Company Law Tribunal under the Insolvency and Bankruptcy Code. It has suspended its operations and has cancelled its flights scheduled for May 3 and May 4th. Go First is blaming Pratt & Whitney engine failures, which have resulted in grounding of 25 aircraft. This is equivalent to 50% of its fleet as of 1st of May. Following the flight cancellations, aviation regulator DGCA issued a show-cause notice to Go First for failing to follow the approved schedule, which would lead to passenger inconvenience. This means the airline has violated the provisions under civil aviation requirements. The airline CEO, Kaushik Khona, told CNBC-TV18 that Go First was forced to file a case against Pratt & Whitney in a U.S. federal court in Delaware. The airline claims Pratt & Whitney is refusing to comply with an order issued by the Singapore International Arbitration Centre. Ritu Singh is joining us now. Ritu, it's a rare case of a prominent company voluntarily filing for bankruptcy. What could be the reason behind this and what's the way forward?
Well, this is certainly one of the most prominent companies filing for bankruptcy under Section 10 of the Code, which essentially deals with initiation of corporate insolvency resolution process by the corporate applicant himself, not the lenders or creditors, but by the applicant. Now, there are various reasons why Go Air would have done this. First and most importantly, the second, this application gets admitted into the NCLT. Go Air gets the protection of moratorium, which means any of the creditors, operational or financial, cannot take action against the company, cannot enforce their securities for any recovery proceedings and so on. So it allows, the company to sort of clean up its balance sheet under a court-dictated process. The rest of the process is very straightforward, similar to what we've seen in other IBC cases, which means the court is going to appoint an insolvency resolution professional who will then invite bids and sell it to the highest bidder. But, it's more complicated than that. For instance, will lenders oppose this filing of the application by Go First? Because who are the lenders? For instance, there's Central Bank of India, about 1560 crores, Bank of Baroda with 1430 crores of exposure, Deutsche Bank, 1320 crores, and Axis and IDBI have very limited exposure. In total, the outstanding loans, according to other sources, is about 5,600 crore rupees. Now, will the lenders go in court and oppose this application, saying it's premature because if the moratorium kicks in, then they will not be able to enforce their securities? So we have to see if it passes that hurdle. And secondly, who will be the buyers of Go Air, even if it does get admitted? Because we've seen in the case of Jet Airways, the demand to buy out aviation companies isn't large. It's not the most conducive environment. So that also remains a huge question mark.
Oh, it does. Ritu, thank you so much for putting those things into perspective. We'll keep coming back to you for more updates on this story. Moving on now, market regulator SEBI's new advertisement code for investment advisors and research analysts has come into effect. Yash Jain is standing by with the details and what the impact could be. Yash.
Well, market regulator SEBI has written to all investment advisors and research analysts on advertisement code. Now, advertisement code essentially draws out a broad framework in terms of what these research analysts and investment advisors can advertise and the way in which they can advertise their products and services. Importantly, in terms of what has to be done, all these research analysts and investment advisors will have to carry a list of disclosures which the market regulator SEBI has drawn out in every form of advertisement which they make across medium. So be it print, be it audio video, or be it social media, any kind of advertisement on the products and services of the community will have to carry this list of disclosures. Again here, what not to do will become more important than what has to be done. Here market regulator SEBI has drawn out a list of things which will have to be prohibited from every kind of advertisement made by these research advisors and investment analysts. So these would include things like statements which are false, misleading, biased or deceptive and based on assumptions. Any misleading or deceptive testimonials will have to be avoided. Any promise or guarantee on assured risk-free returns will not be allowed as far as these advertisements are concerned. Also, extensive use of technical and legal terminology or complex language will have to be avoided. Apart from that, any statement which directly or indirectly discredits other advertisements or other intermediaries will have to be avoided by the community. Reference to past performance and use of superlative terms like best, number one, top advisor, research analyst will have to be excluded as far as the advertising material is concerned. Finally, any kind of advertisement by these research analysts and investment advisors cannot carry market regulator SEBI's logo, and a prior approval from SEBI recognized supervisory body will have to be taken on any kind of advertising material before they are released to the larger public.
Take your point. Thank you so much, Yash, for joining us. So that is an update coming in for SEBI-registered investment advisors. We'll slip into a break now, and up next, we'll get you all the cues from the commodities market. Stay tuned for that. Welcome back. Still tuned into Power Breakfast on CNBC-TV18. It's time to talk about commodities now. Crude prices, they are in focus for sure. Manisha Gupta is joining us with all the updates. Manisha, what's happening with crude?
Well, hey, hi. Yes, 5% of a decline in the overnight market is what we've seen for the crude oil prices. And just crude, gasoline and heating oil prices also fell by 5% overnight. And, you know, the month of April was the first one after 5 months of decline that we saw crude prices gaining. But the May has brought it back down yet again. So we are trading at a 5-week lows for the crude oil prices as the U.S. politicians discuss ways to avoid debt default. And the markets are looking at expectations of a rate hike from the U.S. Fed and ECB this week. Not just the crude oil prices, there is a decline seen in the metal prices also. The industrial metals also have taken a bit of a hit. But among all of this, it is the gold prices which have surged by nearly $35 in the overnight market. So we are trading back above $2,000 per ounce. And the way the new openings in the U.S. have declined, the data that has come in from U.S. and China has been on the weaker side. Gold clearly seems to be taking a center stage.
Okay, so some safe haven buying that we are seeing in gold, but crude prices under pressure. Manisha, thank you so much for joining us with all that update. Quickly taking a look at what the Asian markets are doing as well, because they are under pressure. In fact, Hang Seng has extended the losses that we spoke about a while back. The Hang Seng is down 1.2%, Taiwanese index lower by 0.4%, and SGX Nifty is indicating that the start for our own markets, well, that could be in the red. An 80-point downtick is what this index is suggesting. We'll take your leave on this edition of Power Breakfast. Stay tuned. Bazaar Morning Call comes up next.